Good morning, everybody, and thank you for joining me. I'm Daniel Lang, and I'm going to take you through Mastercard's fourth quarter and year-end financial results. Just a quick overview of what I'm going to talk about today. We'll look at the nature of business as usual, then we'll jump straight to the recommendation. We'll highlight some key points from their financials and look into their divisions. Then we'll look at the company's guidance for 2018, and we'll finish off with a portfolio guidance. So first of all, I think most people are familiar with Mastercard. They provide financial transaction processing services. Mastercard manages various payment brands and a global payment network, which allows it to provide authorization, clearing and settlement of electronic payment transactions. They offer payment processing services for credit and debit cards, electronic cash, and automated teller machines, as well as traveler's checks. Mastercard charges fees to the customers based on the number of the transactions and dollar volume which are processed through the network. So next we'll jump straight to the recommendation. Although the share offers superior growth, we believe this is fully reflected in the current share price. The valuation seems stretched from both a relative and absolute basis. Due to Mastercard trading at a forward PE of 28.3 times, and this is ahead of its long-term average and slightly ahead of its peer average. We'll take a look at the forward PE graph in the portfolio guidance. The group's position in the market is strengthened by the strong network effect of its offerings. Mastercard's growth prospects are supported by the shift from cash transactions to electronic and card-based payment methods. The group holds a strong position in emerging markets, and Mastercard's business is defensive in nature. It offers high annuity revenue streams and high margins. The group does, however, face a tough competitive environment as new low-cost competitors and alternative payment methods increases. Continuous investment in innovation and development will remain a key priority to fend off the impact of this competition. The development of disruptive technologies will remain a headwind for the group, and changes in regulation poses a significant risk, as with the recent European regulations being a challenge for the group. Now we'll take a look at their financials. First of all, the net revenue grew by 20% to $3.3 billion. This is up 18% in a constant currency basis, and this is mainly on the back of strong growth in cross-border volumes, switch transactions, as well as a 3% contribution from acquisitions. The net revenue growth was somewhat offset by the 25% increase in incentives and rebates, which was driven by higher volumes as well as new and renewed contracts. The adjusted operating expenses increased by 17% on a year-on-year basis. This was impacted by a 4% acquisition expense, largely due to VocaLink. The adjusted operating income rose by 23% to $1.5 billion, and this was the operating margin that improved by 1.2 percentage points to 51%. The exchange rate movements had a 10 basis point positive impact on that margin. The net finance costs rose from $19 million to $29 million, and this was because of high interest expense caused by the group's issuance of debt in 2016. The adjusted net income came in 28% higher to $1.2 billion, and this is higher for the quarter. The adjusted diluted earnings per share rose by 33% to 114 US cents, when quarter 4 of 2016 it was 86 US cents, and this is with the share repurchases totaling to $1 billion, which added 3 US cents per share. The non-GAAP figures takes into account an $873 million tax impact from tax reforms and $108 million net of tax charge related to the Venezuelan operations, and Mastercard will no longer include revenue generated from Venezuela in its results from now on. Now we'll take a look at the divisions. It's quite simple. It's categorized into the US and then the rest of the world. We'll first take a look at the US with their gross dollar volumes, which was up by 9% on a year-on-year basis to $423 million. This was mainly supported by credit and debit card growth of 10% and 8% respectively. The purchase volumes rose by 10% year-on-year to $366 million, driven by 8.4% growth in transaction volumes. The cash transactions was up by 4.2% to $56 billion. However, the volume of cash transactions was only up by 0.7%. The number of cards was also up. It was up by 5.3% to 412 million cards. Now we'll take a look at the rest of the world, starting with the gross dollar volumes. That was up by 15%, also on a year-on-year basis, to $998 million, and this was mainly on the back of strong performance across Asia and Europe. The purchase volumes was also up 15% to $671 million. This was supported by a 22% increase in purchase transaction volumes. The cash transactions rose by 13.9% to $326 million, which was supported by a 10.6% growth in the volume of cash transactions. The division achieved card growth of 12% to 1.4 billion cards, and this was supported by strong growth in Europe and Asia Pacific, Middle East, and Africa. Now we'll take a look at the company's guidance for 2018. With improved global economic conditions over the past 12 months, management anticipates a stable environment to continue in 2018. However, they have highlighted some regions that require close attention, and this includes Brazil and Mexico, which have presidential elections this year, and this could increase the political risk despite the significant improvement in Brazil's political environment during 2017. The group is also uncertain how Brexit will impact the business over the medium to long term, but nevertheless, a strong operating performance is expected for the financial year of 2018, which was slightly ahead of what management previously expected. The net revenue is expected to grow in the mid-teen digits for the financial year, and this is including acquisitions and based on new rules related to revenue recognition. The guidance accounts for the deconsolidation of the Venezuelan operations, which will negatively impact results. Now, operating expenses are expected to increase, but by low double digits as the business continues to invest in key long-term growth areas, such as digital geographic expansion, as well as security solutions. An effective tax rate of approximately 20% is expected for the financial year, and the tax reform is expected to have a direct positive impact on the business. This will increase disposable income for individuals and create additional capacity for businesses to invest. Management also plans to utilize this tax saving by increasing companies' employer match to 10% of defined contribution plans. They also intend to make additional philanthropic investments which will aim to help more individuals gain entry into the financial system. The remaining savings will then be used to return capital to shareholders and then make additional investments into the core business, both organic and inorganic. One of the areas that management is targeting is the real-time payments, which has been enabled by the acquisition of VocaLink. Then lastly, we get to the portfolio guidance. The next graph just illustrates Mastercard's forward PE relative to its long-term average. As you can see, it's currently trading at a forward PE of around 28.3% or 28.3 times, I beg your pardon, and this is ahead of its long-term average and slightly ahead of its peer average. Although the share offers superior growth, we believe this is fully reflected in the current share price. Like I said in the recommendation, Mastercard is a good quality company with a high ROE and solid operating margins, but based on our valuation, we recommend an underweight position with exposure of 0%. Now, before we end off, please just take note of the following disclaimer, and if you wish to place a trade, please contact the trading desk. Also, if you have any questions now, please type it into the chat box and we'll get back to you via email. Thank you so much for joining me today. I hope you learned something a bit more about Mastercard. and please enjoy the rest of your day. Thank you so much.